Morning everybody, welcome back to Numis T500. I'm now here with Tom Blomfield, CEO and founder of Monzo. Tom, welcome.
Thank you.
Great, Tom, give us a quick introduction to Monzo.
Sure. Monzo is a new bank based on your smartphone. We offer current accounts, and you may have seen our hot coral, very, very bright orange cards around the UK.
Cool. And so talk to me about why a customer would switch to Monzo. The banking product's obviously been around for generations. Why do people need a different bank? Why Monzo?
Yeah, it's a really interesting question. I think that the big banks have been really focused in the past on selling financial products, be they mortgages or credit cards, and those financial products really are at the core of the bank's mindset, and the customer kind of has to fit around those products in an uncomfortable way, and so interacting with your bank doesn't feel natural. It feels kind of uncomfortable at best. What we've done is tried to start from scratch with the current account and say, what if we design this with none of the kind of legacy infrastructure or old mindset, just to solve people's day-to-day problems. So that's what we do. We're the best place to put your paycheck or your student loan, whatever it is, at the start of the month, and figure out how you want to spend that money over the month, so that you have some left by the next payday. Managing your money day to day and week to week, it gives people visibility and control, and it really reduces sort of stress and anxiety. It's very emotional. A lot of people, a lot of very smart, hard-working people, I have to emphasize, find dealing with their money, staying on budget, on track, really, really stressful. And so Monzo comes along and makes it simple. That's the key thing.
Okay, excellent. And you seem to have acquired quite a lot of customers. How many customers are you on?
Yesterday we hit 800,000.
800,000, incredible. But you don't seem to spend that much on customer acquisition. I don't see Facebook adverts, I don't see adverts on the tube.
No, in the last 10 or 11 months, it's fair to say we spent practically zero. Not literally zero. We've done a couple of very small experiments, but for all intents and purposes, we spent zero on marketing for the last almost a year.
Right.
So it's word of mouth. It's people telling their friends. I mean, that's evidenced by our Net Promoter Score, which is a measure of how likely are you to recommend it to a friend or family.
Yeah.
Our Net Promoter Score is plus 80.
Plus 80?
Yeah.
And I think the big banks are on about 5, aren't they?
If they're lucky. Some of the big banks are about minus 5.
Okay, cool. And then talk to me about behavioural economics. I mean, money is a very personal, very emotional thing for people. How do you form a trusted relationship as a startup with people? How do you educate them that you can help them manage their money and actually be on their side, not against them?
Yeah, it's really interesting, the role of brand and tone of voice and customer service and mission and behavioural psychology. Is spent a long time reading the stuff out of people like Kahneman and Tversky. A guy called Shlomo Benartzi co-authored a paper called Save More Tomorrow. These ideas that the human brain doesn't always act in a way that's economically rational. It acts in a way that is predictable, but sort of predictably irrational. And so we have these, I think we as humans realize we have these kind of irrationalities, and we develop mechanisms to control ourselves. The idea that sort of, I know that I want to go to the gym tomorrow, but at 8 a.m. tomorrow morning, I probably won't want to go to the gym. So how do I force myself? What forcing function can I put in place? So one idea in finance is the idea of just pots or jars on your windowsill in the olden days. People just put cash, cash in the jar for your rent, cash for the milkman, so that it was separate, sort of siloed off to stop yourself spending it. Well, the idea of Save More Tomorrow is that if you ask people today, why don't you take £100 out of your current account and save it? Most people say no. But if you say, in a year's time, why don't we set you up as standing order, or even next time you get a raise, why don't we take half of whatever raise you get before you even see it and then save that? Almost everyone says yes to that. Yeah. Economically, that makes almost no sense. Behaviorally, it makes a lot of sense, because we've got these weird biases that we are always trying to control.
Interesting. And now, how many people are in the company today?
We're about 350.
300 people. And how have you built this team? I mean, it's again, we're in a kind of, you're addressing a very old industry with people generally a lot older than yourselves. How have you built the team? How have you managed to build a platform which works?
works most of the time. We've spent a really long time making sure it's stable and secure and reliable. I don't know if there are a few sort of underlying principles we use. So one is that we look for people who are first principles thinkers, so who approach a problem and don't sort of say, oh well, the way it's been done by everyone else, or the sort of best practice is X, so we should do X because we won't get in trouble. No one gets fired for buying IBM kind of approach. Yeah. We tend to avoid that. We tend to take a problem, then try and break it down into its component parts, and then start from scratch and sort of rebuild the answer. And sometimes that means we make mistakes that would have been avoidable, but other times it means we come up with solutions that are dramatically better than what you have before. So it is a very naive approach, but intentionally naive. It's sort of the beginner's mindset, that you're not encumbered with this kind of legacy thinking. I think the problem we see with a lot of people who come from banks is they are so focused on existing financial products. In an interview, we might start to describe a customer problem. This person's feeling in a certain way, and here are their circumstances. How might you start to think about solving this? And someone from a bank will almost inevitably say, oh, a credit card. All they need is a credit card. And you really have to break that down and say, look, how banks have worked for the last 50 years, but it's not necessarily the best way.
Exactly. Does anybody need to borrow money at 20% APR?
Oh yeah, for sure. Yeah, no, absolutely. Like if you are a person who cannot feed your children, the choice between borrowing money at 20% in APR or your children going hungry
is a good one.
They would bite your hand off to borrow only 20%. Yeah. I think this is part of the problem we have when we're talking about borrowing, is it's such an emotionally laden subject, and people have these very moralistic approaches. It's like, well, I'm a fund manager and I can borrow at 1.3%. It's like, you can borrow 100 million at 1.3%, but if you're a family not earning very much with kids to feed, you cannot borrow 100 quid for 1.3%. You'll be lucky if you can borrow it for 100% interest. So, I don't know, I think this moralising and sort of assuming that everyone is like you is a big problem.
Interesting. You touched on a little bit just now about the tech platform and reliability. I know you have had some outages through the years since you founded the company. How is that going now? How reliable is the platform? And then how does that compare with conventional platforms, which we are seeing actually increased unreliability of the big banks too?
Yeah, so we moved from a prepaid platform back in 2017 to our own technology to run the current account in 2018. And touch wood, that's been very, very reliable. So we were dogged with outages throughout 2017. They were very, very painful, and we were very public about them. But we took a hit on things like Net Promoter Score. It dipped for a while, and people said, I can't trust you to be my primary account. In 2018, with our own technology, it's been much, much more reliable, and hopefully sort of outages for us are a thing of the past. But having said that, no one's ever going to be perfect. And you look at the last, I think, 2 or 3 months, there was a big, first of all, a big MasterCard outage, then a big Visa outage, and just last week we had a faster payments outage. So the 3 payment networks that most of the country relies on for real-time payments all had massive multi-hour outages. So this idea that IT resilience, as it's called in the industry, or sort of operational risk, it actually is it's going up and up the agenda of the regulators and the big banks. All of us rely so heavily on these computers working in the background that we don't think about until they stop working. Yeah. I think it's something that the banking industry will be focusing on for the next 10 years at least.
Yeah, okay. And I think as an organisation, your communication styles, I mean, it's very different to a conventional bank, and it's actually very, very transparent relative to any organisation. So just talk me through the benefits of that, but also, is there some drawbacks to that? Are you giving some people too much information?
So let's start with the principles. We believe in transparency, both internally and externally, for a number of reasons. One, I think internally we aim to hire a bunch of very, very smart people, first principles thinkers, give them all of the relevant context and let them make the decision. And the only way they can make the right decision is if they have the relevant context information to be able to sort of to figure it out. And so if we're siloing information away, they can't make the right decision to build the best products for customers. Externally, transparency is really useful because it builds trust. And trust in banking is a major problem, especially as a new bank. We don't have the money to spend on big branches or TV ads or what have you. And so transparency is our way of developing that trust, that as someone said, sunlight is the best disinfectant. So by being ultra transparent, it forces us to make right decisions. Because if we were in a hypothetical future tempted to make some sort of evil decision, we'd know very, very quickly we'd have to tell everyone about it, and they get very angry. So it acts as this really useful forcing function that I'm going to have to justify this decision to all my customers. So it just keeps us honest. I think it's really, really great. It has raised eyebrows. So we talked openly about the Ticketmaster breach, for example, and the way we tried to work with them. Others in the banking industry were deeply uncomfortable at that and told us so.
Interesting. Now, revenue opportunity. The conventional revenue opportunity for a bank is really driven by balance sheet lending or asset gathering. You don't do either of those things at this point. You're kind of more of a marketplace, seems to be the vision for revenue. Is there enough revenue opportunity out of a marketplace in the long term?
Yeah. We believe so, yes. If you look, the problem with, we talk to banking analysts and we talk to newspapers like the Financial Times. They wrote an article on our annual report and basically said, Monzo don't seem to be selling any mortgages, how are they going to make any money? It's just a very backwards looking view of the world. If you compare us to the big savings and loans banks, our ratios look crazy. Our loan deposit ratio might be 1.5% or 2%. We don't do big balance sheet lending. We do overdrafts, we do short-term unsecured loans, which are kind of convenience-led purchases. In the long term, though, I do want to move to a very pure marketplace model where we don't have our own products. I think the problem with being lending-driven, balance sheet lending-driven, is you have to recognise there's a conflict of interest. The deeper our customers go into debt, the more money we make. That is not the ideal position for the long term. I think in the short term, a lot of our customers really have a very high demand for these products, and our pricing is cheaper than 80% of the market, and we're offering a really simple, convenient product. But in the long term, I do want to move to a purer marketplace model where Monzo becomes a single interface and you get access to all the products in the market. I think that's a hugely powerful position and lets us do great things for our customers.
Okay, excellent. Open banking has been a theme. I was just at Money 2020 a few weeks ago and everybody was talking about APIs and what this was going to unlock. Is this a key kind of trend that you're focused on at the moment?
Open banking is really, really interesting. I'm going to butcher someone else's quote now. It has been said by someone whose name I've forgotten, that people overestimate the impact of a new technology in the short term and underestimate it in the long term. I think that's what's happening with open banking, that people see it and expect something miraculous. And the February deadline for the launch of all these APIs sort of came and went and not very much changed, and a few banks didn't meet the deadline. They missed the next deadline as well. And
so they get fined if they hit the deadline?
Not yet. We shall see. And some banks are being really great. Like Lloyds, I have to commend their APIs, the way they've documented, the way they open up. They've really, really embraced open banking and made this data available in a way that's spectacular. I think they've done a great job. Other big banks, less so. But in the long term, I think the impact of open banking will be huge, but that long term might be 5 or 6 or 7 years. This year, I don't see anything huge coming out of open banking.
Okay. Now, just on the company's financing, how much money have you raised to date?
About just over £100 million.
Okay, and you've used crowdfunding for some of that, right? So talk me through why you've used that and whether you found that a beneficial thing to do.
It was hugely beneficial for our brand and our community. Crowdfunding is not an easy way to raise money. We always did it alongside a VC raise, so we had a pretty reputable VC in a competitive bidding process sort of set the price and the terms, and then we carved out money for the crowd and said, you can invest on exactly the same terms, exactly the same price as these top tier VCs. And I think that is a very attractive proposition to our customers. And the intention was to deepen the relationship, really. These people trust us with their salary, and in return we want to let them invest in the company and share in the success in the long term. So it's something we will look to do again in future and get more of our customers involved as shareholders. Okay,
excellent. Now, the competitive environment, fintech has been the hottest space in terms of growth equity financing. It seems to be the easiest place to raise money. There's some other big well-funded competitors, Revolut, Starling, Tandem. How can all of these people survive? Is it a winner takes all? How do we think about that?
Well, the first thing to say is it's amazing to see Europe at the forefront of this sort of current account banking revolution. I think it is starting to become a revolution, not the US. And it's the first time that I can think of, at least, that 3 or 4 competitors are raising in the hundreds of millions within the same time frame in Europe. You see it in the US and Silicon Valley, but not in Europe. The amount of capital flowing in it is really great for the ecosystem and for the customer. So I think that's the first thing. Second, I don't think they'll all survive, but it's a really, really big market and people have their different takes on it. So I think Revolut are really focused now on FX trading, crypto trading, soon to be stocks and shares trading. We're really focused on the kind of day-to-day money management, payday to payday, making sure that you can meet your rent or your mortgage and don't bounce with direct debit. So I think understanding your customers is key. But with this marketplace model, I do think it tends to a small number of winners who internet platforms in each geography tend towards that model rather than 20 different competing platforms.
Yeah. Okay. Great. And then at some point with the marketplace, does this provide the customer with financial advice, and do you use AI to help you do that?
Advice is has a very specific regulatory meanings, and so right now we do not offer advice. We give people information and let them take the choice. Over time, we would like to give advice because I think most people are really lost. They find, excuse me. Oh gosh, something up my nose. I think my co-founder Paul is the sort of informal financial advisor to his family and friends. They come and they don't understand how a mortgage works or whatever, and he is the one sort of explaining that to people. And this used to be sort of financial advisors or private bankers if you were rich enough. I think software has the ability to replace those things at a much lower cost and provide a much better service. And I'd love to get into that market, subject to the appropriate regulatory permissions when the time comes.
Cool. Great. Tom, it's been a fascinating discussion. Thank you for your time with us, and thank you for coming to the T500 conference. Thank you everybody for watching. Stay tuned all day. Lots more to happen here at Numis T500. Please join the conversation, #NumisT500. Thank you.